Hello, everybody, and welcome to today's Friday Fix. It is how it's got for October, I don't know, but it's already October the 31st, and obviously it's a Friday. You join myself and the epic lads from Alpha Picks. I know I say this all the time, but if you aren't following them on the socials, if you're not subscribing to their Substack, give your head a wobble because it's incredibly high value content. As usual, we'll be going through the major themes that have been driving markets this week and also what hopefully themes that are looking to drive markets going ahead if we've got any predictive powers whatsoever. Before I hand over to Alex to take us through this, I'll get the boring stuff out of the way. Nothing discussed on this podcast is trading or investment advice. Nothing is an endorsement. If people do want to endorse us, we will happily take your money and we will tell everyone about your company. But at the moment, no bites. But anyway, I'm going to put my begging bowl away. And Alex, Jack.
Nibbles.
Good afternoon.
Good afternoon.
First time ever, it actually popped up a disclaimer on my one saying defamatory or obscene content or comments are strictly prohibited. So
that's just in the chat.
Just in the chat.
This is probably a good point to mention. These are recorded live. There's no editing involved whatsoever. So apologies if we go on very weird tangents. And apologies if you hear shit, fuck or bugger. That's the way it is.
Well, there we go. That's us demonetized already. Yeah. Anyway,
I suppose we got to kind of think of as much ways for you to generate revenue as possible at the moment after your Deliveroo saga. Oh, sorry.
Yeah, I know. Yeah. We've glossed over that. We're on to bigger and better things.
Listen to last week's episode for more.
Yeah.
I'm really looking forward to the AI summary of this introductory.
It's true. But actually, it's a good place to start, actually, Jay. Thank you very much. With AI. A nice little segue to kick us off.
It's almost like we planned
it. I mean, arguably not the biggest story of the week, but certainly one that I think would generate interest and one that I'd like to pose to both of you was OpenAI basically recapitalized themselves. And so essentially they've split out the not-for-profit foundation and then they've set up the for-profit entity. And obviously, like, Microsoft has a stake, the non-profit has like a 26% stake, I think it is, in the new company. But it tees it up for an IPO and it tees it up to make it more attractive for investors going forward. So the question I have for both of you is, they say OpenAI could go public as early as next year. And if we fast forward and the sentiment around AI is exactly the same as it is today, and OpenAI did go public for, let's say, $1 trillion valuation, would you be a buyer of it, given where we're at in the AI overall theme? Or would you be like, do you know what, I'm actually going to sit this one out for a bit?
Jay, you can go first on this one. Throw you under the bus.
I probably would add it to the portfolio side, kind of your other names that have kind of carried the indices higher over the last couple of years. I think, although there have been stocks that outperform those, they're kind of very good core names that I think everyone's kind of just adopted in because of how much they're carrying the index. I think, OpenAI probably fits in the same boat as them.
I would, to be honest, I'll be missing that. I'll be skipping that one. I'll let everyone else clean up on it. I would much rather be on the picks and shovels side because, yes, they've got first mover advantage to an extent. Yes, they're going to float. It's going to be a massive kind of, cult following maybe, but they are one of many and of agents and LMMs or LLMs or whatever they're called. I just think there's probably better ways to play it. Obviously, I'm like Nvidia for one. Why not just double down on Nvidia? Because the more money OpenAI make or get, the more Nvidia chips they're going to buy. I don't know. It just feels a bit. It feels like one of those events that could we'll look back in 10 years' time and that'd be the top. You know what I mean? I'm not saying the top of the stock market. I'm just saying the top of this AI particular bubble because these valuations are fucking insane. And are they monetizing it? I don't know. There's just too many variables for me to think that this is. It's almost like crypto. OpenAI isn't the Bitcoin of AI. Do you know what I mean? It's not like there's only one that's really going to kick on and do well. There's so many others out there. You've got to try and pick the right horse at the right valuation. And for me, OpenAI IPOing it to $1 trillion. Yeah, I'm not sure. But here's a question for you then, throwing it back at you. What exchange will it list on? I've got my theories.
I mean, I'd say the I mean,
Well, would
NASDAQ?
would
I mean,
NASDAQ allow it? Because it's a non-profit tech. Well, I don't know. It's all look. You need AI to work out the corporate structure of OpenAI, basically.
well, yeah. Well, that's the whole point. That this is the for-profit
Yes, I guess so.
subsidiary, or not even a subsidiary, but just spin-off, if you like.
How
The
about this for an option? The Texas exchange, when that opens up, because obviously space. Genuine, because obviously they're don't laugh at
SpaceX would
me.
wanna
Because SpaceX
list that.
are going to be like the initial one to launch, and
Mm.
the Texas exchange, they are very much pro like mega tech and mega like future endeavors kind of thing. And I think OpenAI would be a good fit. And what an exchange that would be if you got SpaceX and OpenAI on it. And then
But
if
yeah,
you put it in a bid, I'll give you a clue.
if the Texas exchange want to make a mark, that's definitely the way to do it.
Well, exactly. And we know Musk is a massive fan. Well, we know Musk and all that lot, massive, and fucking Altman and all that. They know they're massive fans of Texas for all the energy and stuff like that. To me, it just makes a lot of sense. But we'll see.
It's true. Yeah, I don't know if the whole thing with Musk and Altman and their feuds over the years would put him off.
Where are they list?
Yeah, maybe not.
Potentially.
Maybe, but yeah. I mean, like, let's see.
I mean, they are petty fuckers, so you wouldn't put it
Yeah,
past them.
yeah. Wouldn't put it. But we've seen stranger things happen. Put it that way.
Yeah, right.
Yeah. No, I'd say I slightly more lean on with you, right? I mean, I think like it's one of those. I think it'll be one of those stocks that, like Nvidia, that you just basically have to have, or not Nvidia necessarily, but the Mag 7. I
Yeah.
feel like whereas you should always have some Mag 7 exposure,
Yeah.
I feel OpenAI is one of those where you have to have some exposure. But I'd agree with you that it's like, could it be one of those ones that signals, a top? I think potentially.
To be fair,
yeah.
I think Jay kind of summed it up well. You need it in your portfolio, and I think he's spot on. If you're a fund manager, if you've got assets under management, you cannot not own OpenAI, because if OpenAI quadruples in price in 6 months, your investors and they're going to go, why the fuck didn't you buy that? It was obvious. So you almost need to, if you're an asset manager, you almost need to own it just to cover your own ass. Because if it does fall out, it's an easy argument to say, well, look, everyone's, it's OpenAI, it's AI, we needed to invest in it. But if you don't and it screams higher, then you do look like a bit of a twat.
Yeah. Yeah, it's true. I think the things, the beta on that stock, I think will be very sensitive though. Because again, as much as Nvidia has been the poster child so far, is that something like OpenAI, which you could argue slightly more fluffy in terms of profitability, when you get a drawdown in the market in general, I mean OpenAI, that's going to be a whippy one to be in.
But you see what I mean, right? You can almost picture if we had a time machine to go forward in 5-10 years, it'd be a classic example of this was the key. It was so obvious that was the top $6 billion valuation. You know what I mean? It's like it's almost written in the stars that this will be what happens.
Well, we'll see. We'll have to listen to this back in 5 years' time, wherever we are at that point in time. And the last bit on AI and tech that I want to talk on before we get to Mag 7 earnings was, you probably saw it, the new humanoid Neo.
Oh yeah.
I don't think you call it a robot, a humanoid. I guess
just call it a robot. We all know what we mean.
And it's kind of like, $20,000, you can get this little guy, and to what we've seen, you can do your household chores. Is it, the solve to all problems? No, but is it a pretty decent step forward in both adoption and commercial usage? Absolutely.
Yeah. Although I'm waiting for the headlines where it turns out it's just like some little Indian fella in there. It's just like slave labor for. Well, jokes aside, you remember like the HelloFresh and like the Amazon grocery stores that were claiming to be AI, like tracking what you were picking up off the shelves and stuff, and it turned out that AI stood for a lot of Indians, and it was just like a load of cameras in the back. And that actually happened this year. I mean, I'm not saying, by the way, I'm not genuinely saying there is a little man in a robot suit, by the way.
Good to know. Good to know that. Yeah, exactly.
Just in case they want to sponsor us.
Yeah, exactly. Yeah, just in case we can be remonetized. So, moving on, Mag 7 earnings.
Moving on quickly before Ryan gets us in more shit.
Yeah, a very sort of mixed bag, I would say. I mean, obviously, overnight, last night from market close, Amazon obviously killed it. Amazon Web Services in the cloud division had a massive revenue beat, fastest since 2022, and Amazon's up 13% pre-market. So on that side, it's fantastic. You had the flip side of it where basically Meta and Microsoft got slammed Wednesday before opening bell, because essentially their growing their capex spend
Yeah.
for AI, which we all kind of knew everyone was going to do.
Yeah.
But it's always this kind of finger in the air recently where it's like, are you going to put out huge capex spend and the market goes, yeah, fantastic, go for it, we believe in you? Or you put out huge capex spend and they're like, blimey, like, I won't be spending that type of money on AI, and
Yes.
sell
No,
your stock.
exactly.
So, yeah, I think it's an interesting dynamic in the market where one is you're seeing a bit of divergence, but two is the bellwether of, do investors like sacrificing short-term profitability for long-term potential gains?
Well, this is it, right?
They're not quite sure.
No. Yeah. I'm with you on all of that.
Mm.
Nice and easy for me.
Yeah. But I think it's one where, for example, the Microsoft one, they basically spent 35 billion in the quarter just on AI capex, which is like when it was only October, at the start of this year, we were saying that some of the forecasts were that they were going to, these Mag 7 stocks were going to spend 100 billion in the next year on AI spend. And we were like, that's crazy.
Well,
and now you run rate this and it's 140 billion.
Well, no, exactly. Well, yeah, funny enough, I was doing the overnight news roundup on the Morning Blast this morning. Obviously, do listen to that podcast if you don't already. And when I got to the AI section, it was like 300 billion there, 400 billion there, 100 billion there. And I'm like, I remember when $1 billion was a lot of money.
Mm.
And now it's just like how long, here's a question for you. Do we see in 2026 the first $1 trillion investment announcement?
Ooh, yeah. I mean, like a multi-year deal, yeah, I reckon you could see that. 200 million over the space of 5 years.
Yeah, but imagine we said that 12 months ago. It wouldn't even be a consideration. You'd be like, Ryan, what you smoking?
Yeah. I mean, the numbers are going higher and higher. I agree on that.
Yeah.
I mean, even on a little tangent, did you see there was one about the Tesco meal deal? The Tesco
God,
meal
this
deal
is
up
a
again.
tangent.
And it's just they're like, they reviewed, I think it's something like the start of the pandemic, it was £3.25, I want to say. And it's now like £4.50. And so
there you go, a man on the street.
A man on the street is that, talk about inflationary pressures. The Tesco meal deal could be the new Big Mac index.
Oh, okay. Yeah, I'll tell you for that.
Take me up on that one.
I don't think I'd rather do it on like maybe, I don't know, cigars. I think that's a decent one for me.
It's like Venezuela all over again, that one.
There's you lot worried about me going on a tangent.
Yeah. Let's move on again to the Fed. FOMC meeting. I don't know if either of you want to wade in on that. I mean, I think most of our listeners will know, obviously, they cut interest rates again by 25 basis points. They also signaled they were finishing off QT, which is something we spoke about last week, that makes complete sense. The main takeaway I got was that it's basically the future becomes a little bit more murky. December cut isn't guaranteed. Into next year, they're not sure. But what do you guys think?
I think he's played it well, to be honest. I think everyone was too committed to, like, what was the pricing? 70% that there was going to be a cut in deck before the meeting or something around that.
It was basically at 100, basically 100%.
What in deck?
I think it's about.
It was going into the meeting.
Right. Okay. Got you.
Yeah, I think about 70%.
Right. Got you. I knew 70 came into play somewhere. Apologies. I was out most of yesterday afternoon getting pissed up, and the day before. Anyway. I think he's played a blinder because he's given himself optionality. And at the moment, that's exactly what he needs because, remember, he still hasn't got data. Yes, ADP, long live ADP, that's coming out weekly now, which would be, blessing for the Fed. But, when you've got like this China deal and all this, that and the other, and, we don't know what Trump's going to do next. Like the China deal could unravel very quickly. I've just seen my mum and dad. There you go. That through me. Yeah, I just think he's given himself some options. But also one thing we know, and this came up with Michael Brown again, he can do that. He can basically walk the market back to a 50-50 because he's got now over a month to get some more information. But also we know the Fed are very, very good at communicating what they're going to do. So why not walk back the 90% or whatever it was to closer to 50-50? Then you've got time to play with. And, when you are more certain, you then start putting out, the speaker, start putting out some comments here and there. You speak to your Fed whisperers, et cetera, et cetera. I think it's the right way to do it. I don't know what you guys think.
Jay?
Yeah, I think you're right in the fact that putting it more towards a 50-50 because they have so much time to lead markets in the right direction. Once we get near that time, that's how they've always wanted to play it that way, and that's how they've teed it up again now.
Yeah.
I think my one kind of note that I made in my mind from the meeting was the language that Powell used about that
Yeah,
December meeting, because usually he would just say, look, we're going to stay data dependent. We've not made a
yeah,
decision on December. That would be his default way of answering that type of question.
yeah.
But for him to say it's not a foregone conclusion and then also add that they're far from it,
What?
I think
Yeah.
that kind of stood out to me, that he really wanted to walk
And do you
market
know what?
expectations back.
That's a really, really good point. And also something that Michael Brown raised. I think he did it on one of the podcasts, or if not, I read something that he said it, or he might have told me in the pub. I can't remember. One of the three. But the fact that it was in the statement, the fact that, and that's, that means it clearly that's what they wanted to get this message across. It wasn't just an answer to a question. Like, they purposely said this. So yeah, it's an interesting one, and obviously not. I didn't see anyone in any previews that I read was expecting this kind of language, but there you go.
Mm. Yeah, and I think the only thing which I think still has gone a bit under the radar is the whole impact of the lack of data from the government shutdown.
Yeah.
Because it's like, there doesn't seem to be a massive amount of urgency from headlines I'm seeing to get something done, ASAP, to get everyone back online.
Yes.
And even when you do get back online, the problem we're going to face now is that because for different sets of data, they haven't been collected now.
Yes,
But then
exactly
the future periods, you're going to start to have either missing sets of data, even if they came back online today, you'd have a.
Do you know what? I hadn't even thought about that yet, because it's going to be, it's going to take 2 or 3 months of just messy, noisy data before we get back to normal. And also it's going to really mess up people's like charts and stuff for data, or like tables, because it's going to have this massive hole, and then it's all there's going to be some mean revisions to the NFP over the next 6 months.
And so, like, the Fed, I remember when we were talking about this a few weeks ago, and I was certainly in the camp, but it's like, I was more, I don't know if the Fed can justify a cut in October, given that, they won't, if they don't have the data. And obviously I was wrong on that, which is fine. But we looked at December, and I'm like, I really start to struggle to see how, if the governments remain shut down until the Fed meeting in December, it's like, at that point, the government's been shut down for what, like 10 weeks, 12 weeks? And it's like, are you really happy to go again and cut in the midst of flying blind for another 6-7 weeks? Like, I don't know. I just think there has to be a point where it's like, we can't reliably say what state the economy's in. And so we just kind of sit on our hands for a little bit.
No, exactly. Yeah, it's rather them than me. Put it that way.
Yeah, I don't know. I just don't think it's getting enough attention. I think
you're now you've mentioned it. I think you're dead right.
Yeah, might have to write a piece on it.
Well, there you go. Fire up the Jesse.
Yeah. So, and then the last one I wanted to talk about for Open was our friend Donny Trump. He's been busy this week, isn't he, in Asia?
Yeah.
He was over in Japan at the start of the week, and he struck a deal for some critical minerals, which was obviously something we spoke about last week with Australia, and obviously the impact from there with China. But then even from his meeting with Xi, that thawed tensions. I mean, the wonderful headline I saw was Trump's quote that he was like, if I had to rate the meeting out of 10, I'd give it a 12. And I'm like, of course.
Because any other person would say 11, but he's got to go that one.
It's just so weird. But they basically, from the headlines we're seeing, tensions have eased there, and China's have agreed to basically pull back on the sort of stricter critical minerals.
I think a really key thing on this as well, and we've seen this time and time again, that Trump will put out a statement saying this was an amazing meeting, or this was really, 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 really good. But then the other side, the counterparty, will be a little bit like tapered in there or measured in their kind of response. But we saw the reaction and the official releases from Xi and co. They're also very bullish on what happened. So, I'm not saying it's by the rumor sell the fat, but it's just, it's one less reason for people to be fearful. And, and that was this overhang of this risk was a reason for, de-risking ahead of like Christmas, New Year markets, Christmas markets and stuff. So, obviously proof's in the pudding, because as we saw in the first administration, you can agree stuff, but then nothing's actioned. But, it was a top, in my opinion, it was a top meeting. They've seem to have done very well. We'll skirt over the specifics on the soybean purchases, because Angie mentioned, or who I do the grain blast with, she mentioned straight away, it's like, it's one thing saying this year in terms of purchases, but are we talking crop years, which is September to September. We're talking calendar years. Also, that you run a huge risk of China could wade in and literally lift all the cargoes that are available in beans. And that will really mess up the kind of the logistical flows and stuff and the supply chains in the US. So, they almost don't want them to buy too much at this stage.
Yeah, I mean, that's a very good point. Yeah, I hadn't thought of that either on the soybean stage. But the only interesting takeaway I take from these more is that, the markets were relatively unfazed by, I mean, Japan, you can sort of get away with it. It wasn't a huge deal.
Yeah.
But with Xi and the positive soundbites from that, if we reround and that happened in like May, June,
Yeah.
I think markets would be off to the races. But
Yeah.
it was quite telling as well that there wasn't really much of a follow through in terms of risk sentiment off the back of that.
Is that because we've already, it's been a phenomenal year already, and is there much cash on the sidelines that's not already committed to equities that wants to be committed?
Yeah, yeah, it's true.
And
yeah.
also year end. Yeah, I know it's silly to say it. It's not even November yet, but it's been a phenomenal year. If you're not all, if you have got money on the sidelines, are you really committing it now ahead of Christmas and the Christmas markets, and all of that, or are you happy to just, take, just have the profit on what positions you already have? I know I agree with you. I think it's weird. I was expecting it to go like scream higher, but take a step back. I can kind of make a case for it not doing that.
Mm. And finally, I've just seen a little headline come through on Bloomberg. The US has decided to attack Venezuela's military sites.
Oh, really?
So we got Venezuela in there.
Oh, well, and this is my favorite topic. Next up, Colombia.
Yeah.
There you go. Unfortunately, most people play this back, so this will be old news for everyone. But it's exciting for us.
No, I knew it was the case.
I've got a question for you. I got something for you. Obviously, we're getting closer and closer as the days tick by to the autumn budget in the UK. I think income tax is definitely rising, isn't it?
So yes, I would say. I mean, I don't know. I wouldn't necessarily say it's outright rising. I mean, I wouldn't be surprised if the banding thresholds for income tax weren't just frozen, but were actually maybe slightly lowered.
Okay.
That would be maybe a slightly more different spin on it. But I do feel income tax as a category is
now open.
Is now open.
Yeah,
yeah.
Well, this is it. It's gone from basically we definitely won't touch it to hang on a second, we might do. One thing I did see that I saw like maybe a 2% rise on the bottom rate, but then a 2% drop on national insurance contributions from employers. Now that's basically walking back the awful decision they made earlier on in the year, but they're making up for it by like income tax. So I don't know, it'll be interesting. I think we've still got plenty of time for plenty more trial balloons to go up in the air and see what sticks, but I think however you slice and dice it, it's going to be a very, very messy one.
Yeah, I mean the one the tangible trade I like from it, which I actually put on probably a week and a half ago now, was actually from the monetary policy angle of things. And it's like if you isolate January to June of next year, there was only 31 basis points worth of cuts priced in. And I think it's one of those where if you get basically a tricky autumn budget, which I think you will, and you start to see, some backlash and just a mess through to year end, then I do think you could tangibly see the Bank of England in the course of H1 of next year, who are already probably going to cut once anyway, logically. I don't think it's out of the question for them to do one cut a quarter to help out the economy, which in theory would put the Jan to June spread at 50 basis points. So I think that's quite a nice way. If you want to play like budget disaster / UK in a pickle, I think that 31 bips, which has gone, it's already moved a bit. I think it's like 34, 35 bips now. Right. But I think that can go to 50.
There you go.
If not
higher. Trading recommendations, not trading.
No, just the thoughts of a practitioner.
Have you put that out anywhere, or is this just you off top of your head coming up with it?
No, put it out last week.
Oh, nice.
Yeah, put it out last week.
Repost that, and I'll give it a boost because I like that idea.
Yeah, I mean, I just think that the Bank of England tried to stick to like quarterly cuts, and I don't see any reason why that's going to change. If anything, it's going to quicken the pace.
No, I'm with you. I like that. I like that a lot. Awesome.
And Jay, what are you thinking on budget?
I definitely don't have as many thoughts on the UK as you guys.
In his head, he's mentally in Marbella.
That'd be lovely.
He's moving to Dubai, so he doesn't have any income tax. Fine. Okay. Yeah. And I mean, on. Oh, go on, Joe.
No, that was Ryan said awesome.
See, this is what I mean. Like, we don't edit these, so everyone knows we're recording live, obviously.
Cool. But yeah, that's all from me.
Awesome. Well, look, guys, absolute pleasure to have you on the show as always. Absolute stars. Again, do follow them, do subscribe to Substacks. And yeah, whatever you're doing, have a lovely weekend. And we'll see you all next week.
Wonderful.
Ciao for now.
See you next week.
Thanks, guys.
Bye.